Should you abandon your plans to buy a home and real estate altogether? Has the foundation of the American dream crumbled? For decades, homeownership has symbolized the American dream. Owning your own home represents independence, wealth, and security. But controversial real estate mogul Grant Cardone just dropped a bombshell. He claims that buying a house is one of the worst investments you can make. In this video, let's analyze whether his shocking claims hold any truth. Before dismissing Cardone's bold statements, it's important to understand his real estate credentials. Cardone built a rental property empire worth over $1.2 billion. His firm, Cardone Capital, owns and operates thousands of units across the Sunbelt region. He's an expert at finding discounted Class B and Class C multifamily properties, renovating them, raising rents, and profiting from the cash flow. Given his incredible success, Cardone has plenty of credibility regarding real estate investing. However, his business model relies on scale. Individual investors flipping houses or renting out single-family homes employ very different strategies. Cardone's wholesale approach may not apply to small-scale landlords. Still, his warning warrants a closer look. In recent interviews, Cardone insisted that buying a primary home is one of the worst investments people make. He outlined the costs of purchasing a median-priced home, accounting for the down payment, mortgage interest, taxes, insurance, maintenance, and broker fees. After 10 years, he claimed that to break even on a $576,000 house, it would need to sell for over $1.2 million. Since most homeowners don't see that level of appreciation, Cardone views home buying as locking up capital that could be invested elsewhere. He sees renting and using your savings to buy cash-flowing assets as the superior move. While this perspective ignores the intangible benefits of homeownership, Cardone does make some reasonable points. Over the past year, the dream of homeownership moved further out of reach for many Americans. Mortgage rates nearly tripled from January 2022 to January 2023, surging from 3% to over 7% on a 30-year fixed loan. Monthly payments on a median-priced home jumped by more than $1,000. Higher interest rates erased much of the advantage of buying over renting in some markets. On top of spiking mortgage rates, home prices set new records in 2022. The median existing home sales price topped $400,000 for the first time ever. First-time homebuyers often face the tightest inventories and most intense bidding wars. Saving for a down payment takes longer when home values are appreciating rapidly. Ongoing expenses like property taxes and insurance add thousands per year to the cost of ownership. Maintenance and repairs also quickly add up, especially on older homes. Being house poor, overextending your budget to buy a home, can seriously limit wealth-building opportunities. While Cardone makes reasonable arguments against homeownership, his case against all real estate investing is less convincing. He fails to acknowledge the unique tax advantages that landlords receive. For example, they can deduct mortgage interest, repairs, property taxes, insurance, and depreciation from their rental income. These generous write-offs help offset the expenses of owning investment properties. Real estate also provides passive income and equity buildup. Cash-flowing rental properties deliver consistent monthly payments that hedge against inflation. Appreciation over the long run leads to significant profits when selling. Real estate's tangible nature and need for housing make it less vulnerable to market volatility than stocks. Now may be an opportune time to invest in rental properties as well. With mortgage rates pricing some buyers out of the home purchase market, demand for single-family rentals is increasing. Landlords can achieve higher rental yields when competition for units declines. There are likely bargains to be found on distressed properties in the coming months as the market slows. Cardone does make fair critiques about the responsibilities involved with rental properties. Finding and retaining good tenants is critical. Late or missed rent payments quickly erase expected returns. Property damage and maintenance costs also take sizable bites out of profits. Hiring a property management company reduces headaches but eats into cash flow. Investors must consider all these factors before pursuing rental properties. Screening tenants, marketing vacancies, handling maintenance requests, and navigating evictions can prove overwhelming, especially for long-distance landlords. However, small multifamily properties with 3 to 4 units balance management duties while providing healthy cash flow. Alternative real estate investments. Direct property ownership certainly isn't the only path to invest in real estate. Crowdfunding platforms allow investors to pool capital to purchase properties, providing instant diversification. Real estate investment trusts REITs, offer exposure to portfolios of assets without being a landlord. REITs must pay 90% of taxable income to shareholders as dividends, resulting in juicy yields. Real estate investment vehicles enable diversified exposure with low barriers to entry. There are still risks inherent with these alternative real estate investments, however. Platform and investment vetting are critical to avoid fraud or mismanagement. Investors sacrifice control over decision-making power related to the properties. Yet for hands-off real estate exposure, crowdfunding and REITs possess major advantages. Before dismissing real estate altogether, investors should examine the overall market conditions. While the red-hot pandemic housing market has cooled considerably, a full 2008-style crash seems unlikely. Home prices surged over 40% from 2020 to 2022, meaning a correction was inevitable as rates rose. However, tight inventory, millennial home buying demand, and investor interest should prevent a massive downturn. Real estate remains a crucial portfolio diversification tool as well. Inflation hit 40-year highs in 2022, decimating bonds and leaving stocks extremely volatile. Real estate's tangible value and ability to generate rising rental income make it a strong inflation hedge. Investors fleeing the stock market may turn to rental properties as well. Real estate continues to offer accessible wealth-building opportunities for everyday investors. Grant Cardone raises legitimate concerns over homeownership and becoming a landlord. His arguments regarding opportunity cost and the responsibilities of managing properties deserve consideration. However, he fails to acknowledge the tax advantages, equity growth, inflation resistance, and passive income provided by investment real estate. With the right property selection, landlord experience, and debt management, rental properties can tremendously boost net worth. Crowdfunding and REITs also open the door to real estate investing without the burdens of ownership. While Cardone is wise to warn that real estate isn't a golden ticket, dismissing it altogether is an overreaction. Patient, prudent investors can still find abundant opportunities. Rather than sound the death knell for real estate, Cardone's takeaways should highlight the importance of crafting a balanced, diversified portfolio. Real estate investing remains viable with prudent analysis and diversification. Cardone makes thought-provoking arguments, but has real estate investing really reached its expiration date? Will alternative real estate investments like REITs and crowdfunding platforms replace direct ownership? Let me know in the comments section. While Cardone's warnings give pause, it seems premature to completely abandon real estate when strategic opportunities still abound. Investors must adapt to shifting conditions and rising costs, but rental property demand looks poised to grow. With proper analysis, real estate can still play a vital role in building long-term wealth. The key is approaching this market with eyes wide open. At the end of the day, Cardone's shocking claim should serve more as a wake-up call than an obituary for real estate investing. His arguments push investors to make careful calculations instead of jumping blindly. But by considering all angles and both risks and rewards, real estate still offers a viable path to profit for those with patience and flexibility.